Bruere.
Brewer, just like with a W. Hi,
Yeah.
everybody. Welcome, everybody, to another episode of Arthur's Roundtable. Super grateful for you being here today and sharing as you have with your friends and colleagues. So thank you for that. Uh, Full disclosure, I have a guest on today that even before we booked him, I didn't realize how much they had referenced family offices as it relates to their business, but I was super glad to see that. And Steve Brewer is with us here today from Iowa, right?
You got it. Yeah, Des Moines, Iowa.
And it the just a little context. It's about land and farmland ownership and what's going on with that. So we're super happy to have you, Steve, today. Thank you for doing this.
Yeah, excited to visit with you.
So let's just start at the beginning of your journey. If that's all right.
Yeah, I'd be happy to. So I'm an Iowa farm kid. My mom and dad farmed together with my brother. Still farm together today, just south of Des Moines. Growing up, if you're familiar with the seed corn industry, my folks were also pioneer seed corn dealers. My grandpa ran the Ford New Holland farm equipment dealership, and so
Sure.
really grew up in the middle of agriculture and kind of knew everybody growing up. I was always urging my parents to buy more farmland growing up, and like a lot of farmers, they like the farm machinery side of it, and I always had a passion for farmland and real estate, and went to college and studied real estate, and while I was in college, the local farm management and real estate company came up for sale called People's Company, and my real estate professor's neighbor actually bought the firm from the two gentlemen that were running it. And so that's how I got involved with People's Company. My parents were farming some of the farms that the company managed. And then it traded hands as I was graduating from college. And that was my first job out of college was working for People's Company. People's was a farm management department for a bank going back to the 1960s. So we
I saw
man,
that on the history. It had roots in the banking business, right? Yeah.
Yeah. We started out as a small Iowa bank farm management department in the 1960s, and then there was a bank merger in the 1970s, and we were spun out of the bank at that time. And if you follow that original bank charter through, we'd be part of Regions Bank today, but we've been independent since then. And so when I came on board, it was a small mom and pop farm management company that served Central Iowa, and I was young and dumb and ambitious and wanted had visions of building a national farmland platform. And so for the last, what is it, 23 years now, I've been building our business out. And today we've got 24 offices around the country. We work in around 35 states, and anything that involves a farmland transaction, that's what we do. So we've got a farm management business that manages farms in 25 states. And I always tell folks that anything from rice and cotton to corn and soybeans to wine grapes to almonds and pistachios and really everything in between. So a lot of diversity of the types of farms we manage. We've also got a brokerage and auction business that handles a lot of transactional work. So we handle about $1 billion worth of farmland transactions for clients on an annual basis. So farm families to institutional investors to family offices, you name it. We work with a lot of different folks. And then we've got a valuation group. We do a lot of appraisal work for bank trust departments, for institutional investors. Whether it's estates or financing or whatever it may be, we do a lot of valuation work there. And then we've got an energy management group. There's so much happening in farmland today with renewable energy, wind and solar, battery storage, data centers. You read a lot about that now. So we end up in the middle of a lot of those transactions. And then there's also the traditional oil and gas part of energy management as well. So we'll manage those interests for clients. Then we've got a crop insurance agency, and we'll probably talk a little bit about that. Crop insurance is pretty fundamental to farmland. 97% of the row crop acres in the U.S. have a federally subsidized crop insurance policy associated with them. That
Like floodplain insurance. Is that a good analogy?
somewhat, but if you have you can insure both price and revenue and yield. So, if you have a weather event or a poor price year, then you can insure the minimum revenue on those acres, and so it's pretty fundamental to farmland. It's one of the only assets where you can insure your revenue on an annual basis, right? And so, a really powerful tool, and it's subsidized by the federal government. It's part of the Farm Bill.
Yeah.
And then the piece I think we're going to talk about most today is our capital markets group, and so we do a lot of work with institutional investors and family offices and high net worth individuals that want to have farmland in their portfolio. They want that diversification, but they don't know how to do it. They don't know how farmland functions or how to due diligence it or acquire it, and so we'll do that work for them and then manage it on an ongoing basis.
So you talked about farm management. Can you expand on that a little bit? What does that mean, really?
Yeah, so it can mean a lot of different things, and it depends on the production system that you're in. In Iowa, our predominant crops are corn and soybeans, and there's about 23 million crop acres that are in corn and soybeans in Iowa, and so about 60% of the land is rented, meaning somebody else is farming it than owns it, and so we'll work with those absentee landowners and help them negotiate rents, collect rents, document what's happening on their farm, advise them on some of these things that you see around renewable energy projects, and really help them manage the farm to create long-term sustainability and appreciation in the asset.
And it's gotten complex, right? I mean, farming is complex and hard work, as we all think we know. But you take the data centers and the solar or the wind and all that. It's gotten really involved, hasn't it?
It really has. When I was growing up and, helping mom and dad farm, it was, just pretty traditional farming, and a lot of these externalities, as I call it, really didn't impact you on a daily basis. And now there's just so much happening with carbon and ecosystem services and natural capital and renewable energy. And, farmland is just fundamental to anything, any economic development project. And so, we end up in all sorts of ethanol deals or biodiesel deals or livestock deals. And like I said, data centers are all the rage right now. And so, we've got a lot of clients that frankly just need help with those types of issues, and that's what we're here for.
Is the Would you mind if we talked about data centers for a minute? Because
Yep. Happy to.
people are, there's what's really happening, and then there's what people want you to think is happening, and then there's a perception. I mean, it goes the gamut, right? So I don't know the answer. I'm not suggesting that I do, but we have Mr. Wonderful out here in Utah that's lobbying heavy to put in northern Utah a data center, and there's one side of the population or interests that say, you're going to increase the rates of electricity for the locals. It's going to destroy uh, the environment. Just go down the list of the bad stuff, and then you get the other saying and say, well, they're not. It's not really doing that. They're not telling you the truth. Do you have an opinion or something to share with us that can either give us comfort or warn us about what's going on there?
Yeah, and I'm interested to hear what Kevin's doing with the Utah project. I haven't followed that, but um, yeah, I mean, we've been in the middle of a lot of these transactions, and I think it's like anybody, not my backyard. Like we want the benefits of what comes from a data center. We all want to use our AI applications, and we all want those things. Yeah, we just don't want to see what where it's made or how it's done or that sort of thing. So I think if you're truly pragmatic, if you truly just step back and take the emotion out of it, these data centers, a lot of people talk about they use a lot of power, which they certainly do. The technology's changed, but they generally historically have used a lot of water resources, and then they create very few jobs. And so, like, if you want to get on the negative side of it, those are the three things you're going to attack: no jobs, take all of our water, take all of our power. On the positive side, in Des Moines, where I'm at, Microsoft has a couple of their largest data centers in the country. Facebook has a major data center project here. Uh, we just Apple acquired a couple thousand acres for a data center, and they're really economic development drivers. They've created a ton of construction jobs, a ton of infrastructure growth. Cities can take that tax base and take that incremental revenue and create, new water treatment facilities and new sewer facilities and pave roads and that sort of thing and improve schools. And one of the things that I've tried to tell some of the folks on these data centers, they always come in with code names. and it's, project XXX, and then it's done in secret. It goes through city staff, works on it, then P&Z pushes it through, and then city councils approve it. And next thing you know, front page of the newspaper, here's this data center project, and then people naturally don't like it because
Yeah, they
they
push
just feel
back.
like
Yeah,
just
yeah.
feel like it rammed
Just
down
in
their
the dead
throat.
of night, right?
100%. So
Yeah.
I actually think, we do a lot of work in rural communities, and a lot of these rural communities are dying. They've lost their manufacturing base. There's not jobs. Municipal infrastructure is crumbling. They can't have modern water treatment facilities, modern sewer facilities, city staff, libraries, swimming pools, all those things that you need. And so I'm watching a lot of these communities put bans on data centers and look at them as a terrible thing. And I actually just think, if you're pragmatic about it, um, you know, you need economic development. If you're not growing, you're dying.
Yeah.
And I think a lot of these cities that are running these data centers off, it's like, well, if you're running that off, it's not a livestock processing facility. There's no odors or a bunch of immigrant labor coming in. I mean, they're skilled, highly paid jobs, incredible tax base, and they actually look pretty nice when you drive by them. They're
Yeah,
well
no,
landscaped.
it's different than driving by a huge solar farm in the middle of nowhere, or even worse, the windmills, uh, my prejudice just expressed. But, they're really not hard to look at, right?
No, no. And so I think if you're in a community that's, needs some tax base and you had to choose between, a packing facility that's, bringing in cattle and slaughtering them, or a poultry facility or whatever it may be, or a data center, I think a lot of people would say, okay, well, the data center is a pretty good alternative. But people just get so they react emotionally, like I said, because a lot of times it's done in the, behind the scenes, and they don't feel like they had any input on it. And I think the data center industry, really missed the PR opportunity on
Totally.
how to do this. And if you would, I've told a lot of groups, if you would just come out and say, look, we want to invest, $500 million in your community. We're going to create these jobs. We're gonna do this for your schools. We're going to do this for your public infrastructure. What community wants us? I think there'd be plenty of communities that would raise their hand for that. But when they come in with project code name and do it without any public input, that's when people have gotten turned off, and that's where I think they've gotten a black eye. And I think it's unnecessary.
Yeah, missed opportunity, I think. And the the technology for water has changed. They're doing a lot of recycling water. And then there's I'm going to sound like I know what I'm talking about, but I really don't. But I'm just repeating what I heard. Uh, there's mini nuclear power plants that create all the power that the center could need. Not to mention decentralized power that's not on the grid. I mean, there's really creative and innovative solutions that are in the offing, or in many cases, real. Right?
Yeah, no, I think nuclear is ultimately going to have to be part of the solution. And then, you're starting to see a lot of off-grid data center work happening around natural gas, where they're not on a 345 kV line, but they're connecting via natural gas. And so we've got a internal mapping platform where we've mapped out all the fiber lines across the country and all the transmission lines across the country. And then you can kind of hone in on, great data center sites and that sort of thing. And like I said, there's plenty of places in the country that you can build these, and I think there's plenty of communities that'll want it. They just got to figure out how to just not be, ramming it down people. It's just been done poorly.
I think so. There's people who presumably are in the know that have the same opinion as you, as it was a missed opportunity to have positive public sentiment based on the facts, as opposed to worrying about what the optics might be and try to slide it in. So I think that's pretty common. Do you have an opinion about how many are being built and whether it's over capacity, or from an investor perspective that the bubble was going to burst?
I'm not a tech guru or anything like that, but I mean, when you just kind of look at the future, it just feels like there's unlimited demand for compute, right? And when you do start to understand there's limited capacity on the transmission lines from the electrical grid perspective, and limited places where you can build these that have the infrastructure and the timelines that it takes to get these built and online. It does feel like there's a long runway ahead of us where you're going to need as many of these as you can because we're just going to continue to digitize more and more and more all the time. So my sense is the stock market might be overvaluing some of the companies, but the demand for data centers just feels endless to me.
Yeah, I think you're right. What about, let's talk about and maybe this is not a good place to start, so you tell me. We've seen Bill Gates allegedly buy lots of land banking. Ted Turner did it. He just died. Rest in peace and all that business. Uh, do you see the asset class, the old saying, they're not making any more of it, become more interesting and people are trying to express it in some way, like you said, who may or may not know what or where and how to manage it? Are you seeing a trend that it's an interesting asset class?
Yeah, there's no doubt. I mean, I grew up on a farm, so all ever understood is agriculture and farming. And I remember when I got in the real estate business in 2003. I used to show up at the family holiday parties, and I was pitching farmland to any relative who would listen to me. The heart surgeon that's in the family, you should buy a farm, and largely it was uninteresting for the first, I'd say, 5 or 6 years of my career. And then, when you got to the '08 financial crisis, people started saying, "Hey, what was that again? What
Yeah.
some
A
farmland?"
crisis, never let a good crisis go to waste, right?
Yeah, yeah. But I think the '08 financial crisis is when a lot of people, including a lot of institutional capital, really discovered farmland. And for those of us that have understood it for a long time, when you study it, it's positively correlated with inflation. If you look at a chart of inflation, it looks like the same exact chart as farmland. It's non-correlated with public equities. So if you're a family that has achieved success and you have, accumulated a lot of generational wealth and you need some diversification and you believe that we're going to have inflation, farmland is an incredible place for people to put their money. And I oftentimes tell people because of my job, I've gotten to drive around in trucks with people I don't deserve to be in their truck because a lot of these successful entrepreneurs, when they've achieved all else in life, a lot of people like to invest in farmland and, people can't steal it from you. And it's a stable asset. And, even talking about AI, you think about all the jobs that AI is going to wash out and, the office spaces that aren't needed, but yeah, farmland is pretty fundamental. It's a hard thing for AI to screw up. You need
Yeah.
farmland to feed the world and power our cars and food, fuel, and fiber and growing populations and increasing diets. And so farmland is just a phenomenal asset. I'm biased, but I think a couple points in my career I saw that interest change coming out of the '08 financial crisis. And that's when a lot of institutional capital started moving in the space. And you saw a lot of LPs investing in asset managers that were professional farmland investors. And that's really played out over the last 10 or 15 years. But more and more all the time, you're seeing this family office group that wants that diversification, wants that inflation protection, wants that direct investment. They're starting to really discover farmland. And then there's a lot of retail investors and Wisdom Tree, for instance, just acquired a farmland asset manager last year called Series Partners, and I think you're going to see more retail investor capital come into farmland. There's some crowdfunding platforms out there where smaller retail investors can pool their capital and invest in a farm. And so I think everybody ought to have a little farmland in their portfolio. And I've always said there's two types of people in the world: people who own farmland and people who wish they did.
Yeah.
And it just hasn't been packaged up in a way historically that it's accessible if you aren't from a farm family. And I think the industry is starting to, financialize in a way that it's becoming accessible to more people, and more people are discovering the benefits of owning it.
Can I give an example and tell me whether there's analogy or similar to farmland? So I spent a lot of time in New York City, met a lot of the big real estate owners and developers, and I'll give you an example. When interest rates were low, somebody had $300 million they had to move from one building to another in exchange, right? And so they were criticized because they bought a three or $400 million building at a 3% cap rate. And the answer from the person that executed the trade was, "What else am I going to do with the money?" Right? I'm going to put it. Forget about the advantage or disadvantage of New York City real estate. It's had a long history of success, but he's just saying, "All right, so I get 3% and I own the asset, and it has at least some potential to go up." And then there were the other people, like perhaps the landowners that that are renting their land to operators. There's tons of land leases in New York City where original people came in, they bought the land, they'll never get rid of it, and they've got a 90-year escalating land lease, and they're just clipping a coupon every year. And it doesn't matter if the development fails, it doesn't matter. They just have that uncorrelated revenue. Are you seeing is that a good comparison to farmland?
Yeah, I mean, I so farmland, you talk about that three cap rate in New York City on a building. So a lot of people look at farmland, and it's hard for people to understand because the cap rates on high quality farmland are, 2 to 2.5, and
Yeah.
they're incredibly low. And people have a hard time understanding why anybody would buy a farm at a 2.5 cap rate. But when you really understand, how it works, in Iowa, over the last 20 years, farms have appreciated at average of 7%. So you take your 2.5%, you add your 7% on there. Now you've got a 9.5% total return. Well, when you could go borrow money during the COVID days at 3%, you're
Yeah.
picking up 650 basis points return on owning that farm. And a lot of people are like, well, where did that appreciation come from, and can I count on that in the future? And in commercial real estate, you have depreciating buildings, and you've got cap rate compression. That's where a lot of your appreciation came from. Well, we have I mentioned the crop insurance business earlier. We have all the actuarial yield data going back 50 years for all the crops in the US. And what you see is your trend line yield growth on most of your crops in the Midwest, corn and soybeans, are growing at 2 to 3 bushels per acre on an annual basis. And so you bought a farm 10 years ago, and now you're growing 30 bushels more corn on that farm.
Mhm.
And so, that's that whole natural capital regenerative resource concept
Yeah.
where you're producing more on that same acre today than you were 10 years ago. A lot of that's better farming practices, better genetics, a lot of those things that are getting capitalized in the farmland values. But that's where that appreciation comes from. So when people tell me, well, the cap rates are too low, it's like, well, 7% is pretty predictable. And I went back, and this is a little bit of a joke, but I went back to the Louisiana Purchase, and Iowa traded at 3.6 cents per acre. And, statewide average today somewhere around 12,700 an acre.
Yeah.
And I've always said everybody who's bought a farm since the Louisiana Purchase thought they paid too much,
Right.
and wondered how they were ever gonna, get their money out of it. But that inflation, where it grows like inflation grows, and you've got that improved production every year, and that's really the secret behind farmland. And so it's thinly traded. Some more stats for you. It's a $4.3 trillion asset class, but it's only leveraged at 13%. Uh,
Yeah. That's
yeah, so
really interesting, right?
very little debt, and then there's very little turnover. And so, you were talking about those people with the land leases where they'll never sell it. A lot of times when I'm flying, I look out the window and it's like, God, all that land is owned by somebody who does not want to sell it, and it just kind of blows your mind when you think about that. But less than 2% turns over on an annual basis. And so when you think about all the money in the world that wants to own farmland, farmers, investors. Um, and then you think about all the available land that's available, and there's not enough land available to pacify the demand for it. And so when people say the cap rates are too low, it's like, well, is 9.5% total return not good enough for you? Or,
Right.
what number are you going for?
So that I was going to ask the question about the turnover. All these people, even if they're not operating the farms, they're not selling it unless
Yeah.
there's a crisis in the family or whatever. They need to slice off a piece to pay taxes or whatever the case may be. Right?
Well, you said it. If I sold my farm, where would I go with my money where I would rather be?
Yeah.
And I people ask me that. I'm like, well, I don't have a good answer for that.
Yeah.
I'm biased. I
Yeah.
love farmland, but
So, 2% turnover would suggest that even the people who own it, well, help me do the math. If I own the property, is that cap rate plus the appreciation the owners, inures to the owner's benefit, and then the farmer's farming it and he's making money?
yeah, so the farmers, and we're in a tougher commodity price environment right now, but the farmer's getting a return on farming it. So they're paying rent to the landowner, and then they're getting their return independent of the rent to the landowner. So the landowner is getting their annual cash return on their rent, plus they're getting the annual appreciation, and the farmer's getting their own economics as well. So we've got farms where we're managing the farm, we're directly operating it for our clients, so they're getting that farmer's return on top of their landowner return as well.
Is there enough margin to do that?
Some of our clients want that commodity price exposure, and and
Right.
there's some tax benefits to directly operating the farms as well. But with the crop insurance system, farmers, there's so much competition to lease farmland that farmers inherently oftentimes will probably pay more than they really should for rent because they want to control those acres and spread their farming across over more acres. And so I have a hard time penciling out farming it yourself for our clients because the farmers are paying such aggressive rents. Like, why take the risk?
Risk,
Uh,
yeah.
and so we'll build a lot of what we call flex provisions into our leases where, if you have a really great year on yield and price, then there's a little
Bump,
kicker back to
little
the
bump, yeah.
landowner. Yeah.
Yeah. That totally makes sense. So what is, um can we talk about the regions? You're in Iowa, which you know well, obviously. Are there places in the the West or in the country that are more interesting than others right now?
Yeah, so if you look at the universe of farmland, you've got the Mississippi Delta region in the southeast U.S. You have California. You've got the Pacific Northwest. You've got the Lake States, and then you've got the Midwest, and those are kind of your core farming areas. And in fact, if you look at what you consider investable farmland, Iowa, Nebraska, Minnesota, and Illinois represents about 35% of all the investable farmland value in the country. Just those four states.
Wow.
And then
Wow.
if you add California in there, it's like 46%.
Mhm.
So we when we were building our business out, we put our offices strategically where the major farmland transactions happen, and that's Mississippi Delta and the Midwest and the Pacific Northwest and the California region. Now, that doesn't mean that there's not other great areas to farm in the country, but when you just look at where the scale of the acres are, those are your predominant areas where the most value is. Um, but when you say what's most interesting, there's challenges right now in California and the Pacific Northwest. There's a lot of permanent crop plantings out there. And the Apple industry has suffered greatly the last several years. There's too many apples in production. You put these tariffs in place. A lot of our tariffs went to Canada, and or apples went to Canada and Mexico, and so you've got overproduction, soft prices, and so guys are losing money in the Apple industry right now. Almonds have been tough for a few years. That's came back a little bit now. In citrus, there's been some challenges in Florida with citrus greening. if you watch the headlines, the rice farmers and the Delta have been getting really hard, but there's been a lot of public subsidy that's gone in to cover some of those losses. So, um, you know, for me, I'm biased. I think the Midwest is the best farmland in the world, and so if you're going to own one farm in one place, then you probably want to be in Iowa or Illinois, but that's one production system. It's corn and soybeans for the most part. So next week I'm going to be out in the Pacific Northwest, and they grow about 100 different crops in Washington State. So there's a lot of optionality out there. They're number one in cherry production, number one in hops production, number one in blueberry production, number two in wine grapes. I think number two in potatoes, and so there's a lot of optionality. So some of our clients want some diversification to their portfolios where they don't want 100% corn and soybean exposure. They want some of those specialty crops in their portfolio.
Yeah, that's really, I mean, let's face it, we go to the grocery store and we don't know where all this shit comes from. That's really helpful and interesting, right?
Yeah, it's changed my perspective. When I'm in the produce aisle, I'm always kind of picking up like what kind of apple is this and where is it from? And yeah.
How about, can we talk a little bit about glyphosate and all that kind of stuff and how the farmers look at it and whether there's good options and what the uh, Kennedy's doing and the lawsuits and all that business is? Can you comment on that?
Yeah, a little bit. We manage quite a few farms organically for clients, and so I think the consumer has accepted USDA organic as a proxy for this is sustainably managed, and this is better. And again, it's kind of like the data center argument. It's like, what problem are you trying to solve? And are you trying to solve world hunger? Or are you trying to solve, erosion? Or are you trying to, eat healthy? Is organic eating healthy? Like, what's the carbon footprint? And so, like on our organic farms, as a for instance, there's a ton of tillage. So you're continually running because you're not using glyphosate, you're not using Roundup for weed control. So that's a positive for some people that you're not using glyphosate, but then all that tillage means you're gonna have more erosion, and so
Uh,
and you're going to be burning more fossil fuels, taking that equipment over the field. So now your carbon footprint for organic is worse than it is on conventional. And if you're trying to solve world hunger, then you probably want to farm with glyphosate, not organically, because you're not as efficient and you're not as productive. So um,
uh,
I struggle. It depends who you're having the debate with, but I can kind of get on either side of any of these arguments. And I call them wicked problems because some of them are just impossible to.
yes, it's just as
Like,
bad, just different issues on either side, right?
yeah, yeah. Very few people can pragmatically tackle this stuff and think about it with a clear mind. They get emotional about it.
Well, and let's face it, we've got virtue signaling all over the place. Just I saw the other day that they were trying to criticize some senator that was bringing out what presumably is facts, and the congressman just said the word glyphosate and held up her coffee cup like to say, "Take that," like she didn't know what she was talking about. And he said, "Are you drinking glyphosate? Because I wouldn't recommend it." I mean, there's people that virtue signal. I mean, we had our own issues politically with all that crap, but um, it is true that Bayer has just set aside a bunch of money and it knows that it's toxic and not good, but the farmers don't have a choice. There's nothing else to use, right?
Well, I mean, yeah, I mean, there's some other products out there, but again, going back to growing up on a farm, they called it walking beans, and I mean, you're manually pulling the weeds out of the field,
Yeah.
and and then they came along with some different herbicides that you would apply them, and it would fry the beans, and it would fry the weeds, and you drive by after you sprayed it, and look like the whole field was dead. And you kind of think about some of those old chemicals that we used to use. And then now you've got soybeans that are resistant to glyphosate, and you go spray that and it kills the weeds and it doesn't kill the soybeans. And it's like, so your alternative back to, are we feeding a hungry world?
Right.
Alternative, if you eliminate, it's like, be careful what you wish for. If you eliminate glyphosate, are we going back to those old chemistries that we used when I was growing up? Are we walking beans? Are we farming organically? And I don't have the answers, but they're not as simple as some people think they are either.
Yeah, it's easy to get on one side of the argument, the other if you're ill-informed or you have an agenda for one side of the right?
That's a fact, absolutely.
Yeah. So what would if somebody wanted to make an expression in farmland, what are the steps that you and so it's interesting to you, meaningful? In other words, it has to be a interesting enough project for you. And if somebody's deploying 100 million bucks, 20 million bucks, 300 million, is it what sort of thing size does it make sense and project? I mean, I'm sure you'll do a consulting project for a fee to get to that place, but what if what amount of money does somebody need to deploy to effectively make an expression on farmland?
Yeah, I mean, it depends who you talk to, but there's been quite a bit of research done on farmland. Like, if you add farmland to your portfolio, it lowers the risk of your portfolio and it increases the return. Like, it's hard to debate it. There's a professor at the University of Illinois, Bruce, that runs the Farmland Research Center, and he's got incredible data on adding farmland to your portfolio. And most financial advisors who've studied farmland, and they've done this different simulations at the University of Illinois, will show that most people should have 5 to 10% of their portfolio in farmland. Well, if you're a guy that's got $500,000 in your portfolio, 5% of $500,000, that's pretty tough to go,
Yeah,
get into farmland. There's ways to do it, but I don't know if I'd recommend it, because the transactional costs kind of eat into your overall performance.
totally.
There's some publicly traded REITs out there that are traded on the stock exchange. Farmland Partners is a publicly traded REIT. Gladstone's a publicly traded REIT. So people that want to get some farmland in their portfolio, there's places like that you can go. There's couple crowdfunding platforms. One's called Acre Trader. One's called Farm Together, where you can go invest $25,000 in one farm. And I think a lot of people, especially my generation, likes the idea of being connected to where their food's grown, and they want to make that investment. But if you're a high net worth individual or an institution or a family office, and you want to go build a farmland portfolio, we've got through our capital markets group, we've got our separately managed account platform where we'll work with these family offices. And a lot of we tell people you need to be thinking a minimum of $20 million to really go build a geographically diverse portfolio, where you've got some high quality Midwest ground. Maybe you mix in some permanent crops and you mix in some specialty crops. But you can do it for much less than that. We've got a lot of people that'll call us and say, "Hey, I want to buy one farm, and I've got a couple $1 million, and there's no problem doing that." And there's plenty of people that have had a lot of success doing that. But you really have got to find somebody that you trust when you're just buying one farm, because it's pretty easy to get hometown. There's plenty of people that'll sell you a farm for too much money and take advantage of you and that sort of thing. And so you just got to really have an advisor that'll help you make sure you're buying it right, you're not buying a problem, and that it's being managed well, because the return is going to come from that appreciation. And so you want to make sure, you got to buy it right, but then you got to manage it well. And that's where you're going to get that great total return.
Totally makes sense. Can we go back to the large landowners for a second?
Hmm.
Uh, and this may not be a fair question, but are they third generation families that had 20,000 acres? Are they uh, institutions that bought up a bunch of land and have you manage it or somebody else? What is there a profile of the large landowners that lease out the land?
Yeah, I mean, it depends on the region too. So you mentioned Ted Turner. Ted Turner was famous for buying these massive ranches and running bison on them, and that's a little different than buying a farm in Iowa. And there's a great magazine called The Land Report where they feature the top 100
The
landowners in
the
America.
land report is how we got to each other, by the way, I
Okay.
think. Yeah.
Okay. They will appreciate that. So, Eric O'Keefe is the editor of the Land Report. He's a great friend, and we actually sponsor their top 100 landowner issue on an annual basis. And so he'll profile these large landowners. Well, that's done in terms of acres, not necessarily in terms of value. And I chuckle and I'll jab Eric about it a little bit because there's some farm families in Iowa that might own 50,000 acres of the best farm ground in the world that's worth far more than some of these landowners that own, 100,000 acres in Wyoming, for instance. So the profile is a little different depending on what you're looking at. But I would say, like when we sell farms, 70% of the time a farmer's buying it. And so when you think about that, that 1 to 2% turning
So it's like
over.
an assemblage, right?
Yeah, the farmers are the predominant players in the market, and yes, there's investors. There's a index called a NACREIF index for farmland. So the professional asset managers, think Nuveen, Manulife, the UBS, Prudential, the major asset owners in farmland. And I think that index now is somewhere around $16 billion of farmland. And that sounds like a big number, but when you have this $4.3 trillion asset class, and these institutional owners have 16 billion of it, it's a rounding error.
Yeah,
And
total.
and you'll read the headlines about, Bill Gates and the Chinese buying all the farmland, and it's not it's largely overblown. It's not the issue that a lot of people think it is.
Can we talk about that? The
Sure.
the allegation is that the Chinese are buying land near our military centers or whatever, something like that, right? Is that true?
There's been a couple transactions, but when I look at our transactions, I can tell you that I've never had a transaction with a Chinese buyer. So, like in Iowa, there's corporate ownership restrictions and there's foreign ownership restrictions. And so it's Chapter 9H and Chapter 9I of the Iowa Code that prohibits a foreign entity from owning more than 50% of a farmland entity in Iowa, and corporations are prohibited from owning farmland in Iowa. And most states have some sort of law on this, and so there's a lot of attention being paid to it right now. It's a big political issue, and President Trump has taken this up, and Harry Booker's introduced some legislation, and it's a hot button issue right now. But if you dive into it, the Chinese, out of all the governments, are the 16th largest foreign owner in the U.S. So they're way down the list, and then when you dive into the transactions, it's related. They own a publicly traded hog business called Smithfield. So there's some Chinese ownership associated with that hog facility, or there's a timber business where there's some land associated with it, or there's a data center that there's some land associated with it. But what there's not is a bunch of Chinese owned farmland throughout Iowa.
Fair
And
enough. That's
so, but
comforting anyway. Who's the number 1 on that list?
I think it's Canada.
Well, that makes sense.
Yeah,
There was a time 20 years ago, Steve, you might remember this. You might have been too young. I don't know. But the Japanese were buying everything. They bought Rock Center, right?
100%. I remember sitting at the dinner table, and Dad thought, the Japanese were taking over the world there growing up,
Yeah,
for sure.
yeah, there was a time. They're probably on that list too. Um, so yeah, I think I did see a chart that you guys shared comparing the land ownership with gold. So, a lot of people are, I'm involved in this a little bit, but, you know, gold has always been, should I get gold? Should I not get gold? Is it a store of value? What is it? And so there's a pretty good indicator that if you're looking for store of value, land might be a better bet. It's just not as liquid as gold is, for example.
Yeah, and I would argue that it might be just as liquid as gold. But Um, but yeah, a lot of people will say farmland's gold with a dividend, right? And they're both real assets. They both have that inflation protection. What gold doesn't have is the ability to 1031 exchange in and out of it, the ability to go put leverage on it, the optionality to go hunt on it, fish on it, hike on it, um, uh, uh, somebody knocking on your door saying, "I want to build a solar farm on your gold," or "I want to build a wind turbine on your farm," or "I want to build a data center on it." And it doesn't have that underlying yield growth that we talked about earlier, or the federally subsidized crop insurance guarantee. So, Warren Buffett had some quote about owning all the farms in Iowa or all the gold in the world, and you'd rather own all the farms in Iowa. So I might have that screwed up,
Okay,
but
we get the point.
yeah, but yeah, I mean, you can clearly tell my view on it. Now, I did. Costco sells some gold bars, and you can go into Costco now, and so for fun, I bought my kids some gold and silver bars. But farmland, in my mind, is a far superior investment. And you touched on the liquidity. So being in the transactional business, there is always demand for high quality farms, and I think a lot of people think farmland's illiquid, but I think this is something a lot of people screw up when they're buying farms. I always tell our clients the strategy is to buy high quality farms with high quality operators in high quality areas. And if you do that, it's hard to screw up. And then if you change your mind and you got somewhere else you want to go with your money, there's always demand for those high quality farms in high quality areas. And so we sell a lot of farms via auction. And so if somebody said, "Hey, I want to monetize my farm," it's about a 90-day process to schedule the auction, market it, close it, and it's more liquid than a lot of people think it is.
So can we talk about that? Why one would generally think, and probably in error, that if something goes to auction, that means there wasn't a willing buyer at the market rate.
Yeah, so I always tell people there's two reasons to have an auction. It's either a highly distressed situation where you're just trying to liquidate something as quick as you can and set the terms and move on, or it's a highly competitive situation where multiple people are going to compete to own something. And farmland's a generational asset. So a lot of farms we sell are century farms. They've been in the family for generations. And people in the community maybe have drove by that farm for 20 years and dreamt about owning that farm someday. And there's what a farm will trade for economically, and then there's what it'll trade for emotionally. And most homes sell for a rational price. Most commercial real estate sells for a rational price. Farmland is the exact opposite. Like you take a farm to market that hasn't been for sale for 100 years, and you've got four neighbors on each side of it that have dreamt about owning it. And the old saying is the time to buy a farm is when it's for sale. And a lot of these people are making generational buys for their family, and they'll pay more than you could economically justify, and that confuses a lot of people. But it happens all the time, and so auctions are a great way to achieve outcomes that would be impossible to otherwise achieve.
That's really an interesting perspective because, like I said, oftentimes when something goes to auction, it's distress. Uh, Steve, there's uh, a general perception that farming's hard. It's not, it fluctuates in profitability, and that while farming could be lucrative, it's not somebody building a software program and exiting to Google for 750 million, and all of a sudden you've got this big chunk of money that's liquid. How does a farmer that's been on his farm for 20 years and his neighbor comes up for sale and he wants it, how does he finance something like that?
Yeah, I mean, I mean, farming is tough, but it's evolved so much. The meeting I was in before this one was with one of the executives for John Deere, and we were just talking about autonomous farm equipment, and they have a technology called spot and spray, where it'll selectively spray the particular weed and not the whole field, and there's so many advances now. When my dad growing up would get home from planting corn, he'd show up covered in dirt and dust and didn't even recognize him. And now you get in this equipment and it's driving itself. And my
Air
dad,
conditioned cab, right? Listen to a podcast, right?
yeah, and my dad, who I had to turn or teach how to turn on a computer, is now watching TikTok while he's
Right.
farming, and so but we've been in a downward commodity price cycle the last couple years, and so there's definitely some pain. But the federal government is highly incentivized to have, um, you know, farmers not go broke. They want to have a food production system that can feed the world, and so there's been a lot of government subsidy targeted at farmers in these poor economic environments that make sure that they're viable. And the crop insurance is a big part of that. And I'll tell my folks once in a while, I wish I could insure my revenue at the beginning of the year,
Yeah,
where
me too.
the
Me too.
government.
Yeah.
And so there's no question that farming is a tough business, and people earn every dollar they make. But it's different than it was 20 years ago even. And you go through these commodity price cycles, and you make your money when you make your money, and then you got to hunker down when you got to hunker down, and but in the meantime, your yield on your farms that you own is growing. You're creating that appreciation, so when that farm comes up for sale next year, a lot of times you'll have equity in the farm that you already bought, and so you'll blend those two together, and your basis and the whole thing maybe goes up a little bit, but it works. And so it's I'm oversimplifying it, but a lot of these families, there's generational wealth in these farming families, and a lot of paid for land that helps kind of expand when things come up for sale.
Yeah.
Yeah.
Is there a typical LTV that the banks, like bank financing, will pull the trigger on?
Yeah, so in your world, there's Fannie Mac and Freddie Mac, and Farmland. There's the Farm Credit System, and then there's Farmer Mac. And the problem is right now, where cost of capital is say 6%. And then you think about these cap rates I was talking about of 2.5%. It's really hard to go make that math work if you're buying
Yeah.
a farm and you're borrowing money at 6 and you're getting 2.5 back. So you've got to put about 75% down to get a farm to cash flow
Wow.
right.
Wow.
But when you look at the loss ratios, you can look, Farmer Max publicly traded, their loss ratio on their loans is almost zero. And so when you look at the leverage, there's plenty of banks that'll go, 60, 50, 60%, maybe 70% on farmland mortgages, because they know there's alternative sources of repayment beyond just the income that farm generates. And they also know that there's other, factors like the appreciation that we talked about that will eventually kind of get that in balance.
Yeah. Well, that's encouraging. So, Steve, we have to run, but this has been super informative. Thanks for fielding my questions. A lot of them are from a place of not knowing. So, thank you for allowing me to ask them.
Yeah, no, you can tell I love talking about farmland, and we'll talk to anybody who will listen to me talk about it. So,
Yeah, and I really appreciate you doing this, and we'll thank our friends at what's the name of the magazine? They. I ended up getting to them first, and they said, "Oh, it's not us. You need to talk to this guy."
okay. No,
Yeah,
the land report, Eric
yeah,
O'Keefe.
yeah,
So we host a annual event in Iowa called the Land Investment Expo, and we've been hosting it for 20 years now. And you mentioned Mr. Wonderful earlier. He was one of our keynote speakers several years ago. But we've had Boone Pickens and who's a great landowner, had the 65,000 acre Mesa Vista Ranch in Texas. But we had President Trump at the Land Expo, Martha Stewart, Drew Bledsoe, um, uh,
Nice. Yeah.
Anthony Scaramucci, and so Eric O'Keefe, the editor of the Land Report, he's our MC for the event, and then he rolls out that Land Report Top 100 issue at the Land Expo in Iowa every year.
What month?
It's in January, which people love coming to Iowa in January.
Yeah,
It's
right.
well,
So, Scaramucci and I've been friends for 25 years, and I interviewed him right after he got out of the White House. It was like a Saturday Night Live episode. He
the Mooch is a great guy. So we've had we had the Mooch come one year, and then he came back the following year with General Kelly, who fired him at the White House, and so we had them on stage together, which was really neat.
yeah,
And I was just in New York a couple weeks ago. The Mooch is a partner in a restaurant called the Hunt and Fish Club, if you're
been there
familiar.
many times. In
Yeah.
fact in fact, I don't mean to interrupt you, but that's where I met Kelly. I
I'll be
met
darned.
Yeah, I met Kelly there at a dinner where Anthony was not there, and, it was downstairs, and I called Anthony on the phone. I texted him, and then he called me, and I said, "I just met your friend Kelly," and Scaramucci said, "That's nice. How's the food?" Right? He wanted to make sure the food was good at the restaurant, right?
Yeah, so I think this year was our fifth year of doing a restaurant buyout. There's a big event we're active in out there called the Global Egg Investment Expo, and so we host a lot of our big clients at the Hunt and Fish Club every year. And we were just out there a couple weeks ago, and that basement bar that you're talking about is exceptional. But the Mooch usually will stop by and say a few words. He was heading to London this year, so we missed him. But great guy.
Yeah, he's a great guy. Yeah, I have dozens of stories that I'll tell you offline. Uh,
Hear him.
Steve, thanks for doing this. I really appreciate
Yeah,
it.
no, thanks. It's a topic not enough people are talking about. So, I'm glad you're sharing it with your network.
Yeah, it'll get out there somewhat. We'll see what happens for sure. But I really appreciate it. And thanks everybody for joining today. Steve, stick around for a second.